Should you buy a commercial property or should you stick with residential properties? Hi, I'm Jared Krause.
And I'm Sam Powell, and we're the hosts of Property Pals Australia. And in this episode, we're going to be discussing when to start thinking about moving into commercial property within your property portfolio.
We also talk about opportunity costs of staying in residential and or moving into commercial.
Yeah, the importance of focusing on your end goal and how to get there with less stress is really important for you to continue to enjoy the journey and make great money at the same time.
Yeah, we also discuss when and why you should stay in residential property based on your love for residential property and maybe your risk tolerance.
Yeah, a big key point we like to just focus in on is enjoying the game of property investing, right? Like you want to make it fun, life is there to be enjoyed, and we'll look at how much work you like to put into property portfolio versus, not doing that.
Yeah. And we also talk about, challenging the status quo of how many passive income streams is too much and why too many passive income streams might not actually be the best route to follow. So very different to the status quo of like you just need multiple passive income streams for wealth. We beg to differ in some different shades of light there. And before we get stuck in this podcast episode, I want to let you know this is not the only way that we help people for free. We do have our How to Maximize Your Borrowing Capacity mini course, and you can get that at propertypals.au/resources. That helps people increase their borrowing capacity so they can increase the growth of their property portfolio by buying better assets. Let's dive in. Welcome to Property Pals, the podcast where we share everything around how to build a property portfolio, from researching areas, financing, structuring, buying, selling, and reinvesting to live a life of financial independence. As a disclaimer, any information shared by myself, Jared, Sam, and the Property Pals team is strictly general and should not be taken as constituting professional advice. You should consider seeking independent legal, financial, and taxation advice from a qualified professional. All right, so let's talk about building a property portfolio, and then when do we decide to get a commercial deal in there versus residential? So, all right. Why start with a couple of residential properties first? If you're going to build a property portfolio, why start with a couple of residentials typically?
Typically is you're entering into a market, you're understanding how property works. Residential is a bit more easy to get your head around. And the emotional buyer helps drive up capital values with residential property. So you're getting that equity uplift into your net worth. And in order to get into a commercial deal, you're generally looking at a 30% deposit. And something that's a good deal from a commercial aspect, you're sort of looking around that $1 million range. So not everyone has $300,000 to start investing.
Yeah, it's a really good point. Most people, will start off in residential because they are not able to get into commercial.
Yeah, and it's different risk appetites as well. Commercial is a bit to get their head around. They understand residential because they might have rented a property or they might have lived in a property, and there's a lot of information around residential property, and the confidence level there is higher because it's perceived as lower risk, because we do need to live somewhere. In any kind of economic downturn, businesses can fail, whereas people will still need to have a roof over their head in order to survive. There's a lot more to it than that from de-risking it. Like, I still say there's high risks in residential as well. If you're buying on the outskirts of town, or you're buying into a house and land package area where you've got 100 properties being built around you, and of those 100, 30 are going up for rent.
Plugging our go back and listen to our
house and land
packages episode.
Some good details in that one. That's mean that once you understand it, you're de-risking your future purchase. So get educated.
Yeah, exactly. Education. I think all risk is decreased. Most risk is decreased by education, right? So then let's just talk about the average investor. right? Somebody that starts off, they buy a residential property. Is it best for them to then start saving towards a commercial deal? And actually, maybe we should touch on what entry point most people make their move to their first commercial deal, and why have it at a certain range, because you can buy commercial deals for 500 grand as well.
Yeah, you can
right?
buy for like 150, 200,
yeah.
300 grand. Like it's it's like anything in Australia. You could buy a house for like 100 grand.
Yeah.
Maybe even less. It's actually pretty crazy.
Yeah.
I think over in not Gladstone, Geraldton in WA, you can buy houses for 120 grand, 140 grand today.
Yeah.
2023.
Yeah.
Crazy.
I know Owen, he has property in the UK, he's just selling one. And I'm like, so what sort of like debt levels have you got on those properties,
Yeah.
And he's like, oh, no, just own them. Just bought them cash because they're a lot cheaper than, buying flats over there. It's, a lot cheaper than the Australian, property market. Our economy as well is insane. Like when I speak to people about the American economy and then like the UK economy and property, our economy here in Australia is like wildly good. Wildly good.
Yeah, if you want to, we're on the commercial side of things, but
yeah, I know. We're just a bit of a tangent.
I always like tangents.
Yeah.
If people don't like me going on a tangent, then maybe it's not the right podcast for them.
Yeah, just trying to say that if you live here in Australia, be grateful because it's goddamn good.
Yeah, well, it's just from a macro perspective, right? Australia's got a lot of natural resources, so your copper, your iron. We've got large farm industries with cattle. We've got a massive beef trade that exports to a lot of the world. So, from a sustainability perspective, we're quite self-sustainable, and we're an island. We've got a lot of positive aspects, and also our land mass is large compared to our population. So the rest of the world's obviously compounding on their growth, and we're a less developed nation, so people are you go to Europe, go to America, you see that the populations are quite high for the land mass. So Australia is quite an attractive opportunity for people, and we have really tight relations with the West and the East, with obviously India is a major culture, China, they got billions of people as residents that are wanting to come to Australia. We've got really great education here. And then you add on, we've got low housing supply at the moment, and we've got an increasing population, and a lot of that is through migration because of the opportunities that people are trying to get out of their current situation to move here for more prosperous times, because we do have an amazing quality of life, and the studies that go out, it's like the most livable cities in the world. Melbourne has featured there many times, and those that come to Australia live in Melbourne. A lot of them disperse because they prefer different lifestyles, like coastal Gold Coast, Sunshine Coast, even up to Cairns, and
living guys. You guys are living. So
yeah, there's my positive vibe on why Australian property long term is very prosperous. But everything works in cycles and markets, and that's both in the residential and the commercial space. So it's important to de-risk it by getting educated and talking to the right people.
Yeah. And so when it comes to adding commercial property into your property portfolio, is there a certain level or certain range or price range that people should, like, it's a better price range to get into commercial at one level versus, like, say, buying a $150,000 commercial property, and if so, why? Because understanding when we should buy a commercial property is going to also determine when we're able to buy something that is within our risk tolerance. So let's talk about the difference in levels and entry points within commercial.
Yeah, so if you're going to a commercial route with a small budget, you're going to have more risk involved because it's more affordable on that front. And you really, from what I've seen, it's difficult to try and find a high quality asset under $300,000. Not to say that it hasn't in the past, but obviously prices have grown, and it comes down to, well, you also are looking for capital growth and income as well. So
yeah, it's not just a cash flow grab.
Unless you are, and some people, unless you are just purely income focused, then you can probably buy that $200,000 office space and put a tenant in there, and it'll pay for itself in 10 years, right? But what I've found with investors from in that space is they come to me and they love the cash flow, but then they don't like the location because they don't feel confident around putting even just $150,000, $200,000 into that location, because it's the opportunity cost of, well, what else can I do with my money? And if you're looking into a location, you could have a great tenant in place, but you're solely then, if you're only an income, you're only relying on the business renting the property. So you're essentially a business investor, not a property investor, in my mind.
Yeah, there you go. So commercial property is more like business investing based on like how the business is going to perform in that economy or that part of the.
It's one part of it,
yeah.
And then you never rely on that tenant to be there forever. So you want to de-risk it by going, well, is this who is this asset attractive to from a lease perspective? It could be physio, it could be a doctor's surgery, it could be just a little cafe, coffee nook. You can buy those little coffee nook lease locations where it's like 10 square meters, and a cafe can run it. But as you know, that the risk of
it's high.
Yeah, well, you've got that many coffee joints, and then anyone that's actually good at making coffee. We talk about coffee a lot in this podcast.
Yeah, even though I don't drink it, but you drink enough too.
Yeah, but like, the reason why, because I've seen it. I've seen good little holes in the wall. They're just small people, small businesses. They got higher turnover because they're starting out their journey in business, and then they get a following, and then they move to a larger premises in order to make more profit.
Mm-hmm.
So that's the constant mindset that I'm going into with.
They're not there long term. They're just making a start, and that's not what you want when you're in a commercial deal, because typically the longer term tenants are the ones that are going to allow you to have a higher property value if you sell it, because a longer lease is far more attractive for a purchaser.
Correct.
Because there's less risk for that new owner of that property.
Yeah, and generally speaking, the lower the purchase price for commercial, the higher the tenant turnover, so therefore the higher maintenance on your time to be communicating with your property manager, or if you're doing it yourself. And then also, it's costly to get lease agreements drawn up and revisited with commercial as well. So, and also with commercial, the accounting side of things might be a little bit more time intensive. So it just gets to that point as well. What is your actual goal? If you've got a couple of residentials, a couple of commercials, and you're just looking for an interesting high income play, and you've got a couple $100,000 you want to throw at it, then obviously let's have that conversation. But I'd also be challenging you to think like, well, what's the point of doing it now if you could maybe stay on your trajectory? 2 years time, you can then afford $1 million asset as opposed to a $300,000 asset.
Yeah. Okay. So that's a really good point. Does that mean that you would suggest starting to enter the commercial property market once you can afford to buy $1 million range asset or more?
No. I know. Sort of, it depends on the individual's circumstances and what they're trying to achieve. So later in life, you're going into more of a cash flow want phase because you want to be a self-funded retirement person.
Yeah.
And what opportunities arise there, like in the commercial space, having that conversation with a good commercial buyer's agent that is in the industry, they can shed a lot more light onto what the potentials are for your budget and cash flow requirements. But like everything, there's always risks in it. Commercial, on paper, it always looks really good, and there's a lot of opportunity in it if you get it right. Like a lot of opportunity in it if you get it right. But there's also a lot of danger in if you get it wrong, it can really financially bankrupt you and undo a lot of the hard work you've done to get to that point. And if you're in the latter stage of your accumulation process, that can unravel many years by getting it wrong. So, and what I'm hinting at is you could buy an asset, you could put a couple $100,000 into it, and then you've got a tenant in there that their business fails, or they default, or they don't renew their lease, and then you've been left with a commercial asset in a location, and if the economy is pulled back where we're not as prosperous, then you're going to be struggling to find a tenant, and you're holding a debt on this property, and you've got no income coming through. That's quite stressful. And then in order to get someone in there, it's a lot of time, and you're also throwing out lease incentives to people. So it's not just the time it's vacant; it's also what incentives you need to get to put forward to these tenants. Sometimes it's I'll fit the property out for you, or I'll give you 3 months rent.
Keep it going.
Yeah. So that can be that can set you back from that point of view.
Yeah. So would it typically be safe to assume that the larger the investment price is, typically the less risk? Like, I know that.
No.
In business, I know that it's quite clear if you're going to buy a $10,000 to $20,000, what they would call a business, I call a startup. There's so much more risk in that versus if you're going to buy something for $200,000 or up to $500,000 for a business. Then typically the more established assets, the less risk. So it's not the same with commercial.
It is to a certain price point, right?
And what's that price point? That's what I'm trying to draw out of you.
Try and draw out of me.
Yeah.
Well,
and we won't hold you accountable to it.
It's not really a price point. It comes down to the deal itself. So if you could have a commercial property which is highly attractive. You got a really good tenant in place, like say it's a pet barn or something. That pet barn, if they get up and leave, then you've got a massive commercial premise which only fits a select number of business
tenants.
Yeah. So then you got to be able to carry that loss carrying forward. You'll obviously rent it out eventually, but that's where the importance of location research in the commercial space is really important as well, because you want to be de-risking that as much as possible.
What do you mean by that? Like,
well, you don't want to buy
commercial. Like, so you also looking for capital growth as well by getting the right location. Is that what you mean by de-risking there, or?
Well, by getting the right location, you do get better capital growth, but also it's if that tenant does vacate, that there's a number of tenants in that vicinity that could potentially lease that property from you as well.
Got you.
If you're buying in places that are further out of a dense population, then you're reducing the level of businesses that are surrounding it. So therefore, you're reducing the potential of tenants occupying that property from you. And then you go further into like the infrastructure is a great one to track with commercial, because businesses need warehouses and office space to operate a business in that region. So looking into that, it's always good to keep your finger on the pulse. Like at the moment, areas of say Gladstone are booming, and there's a lot of infrastructure and businesses investment going into that region. Yes, it's a strong mining town, but there's also a lot more going on in regards to the local councils putting in a lot more infrastructure to expand that region. A lot more businesses are going in there because there's a lot of growth in the renewable space, and that's kind of why it's quite attractive. With those more businesses coming in, you're de-risking it from that point of view. But once again, if you're going into that's like $3 million plus those bigger assets, you're really delving into the lease agreement, because you can pay off a commercial property in 10 years, right?
Mm-hmm.
If you've got a 10-year lease, then you're de-risking it every single year, because that person's renting it from you, you're paying down the debt.
Yeah.
You might get to a point where they have a lease renewal, but you've got really low debt on that property, so you can wait out longer for a new tenant, because
it's not going to cost you too much.
Yep.
Yeah. Wait for a longer tenant, which will actually boost the value of the property when you want to sell it, if you do sell it.
Yeah, there's strategies in commercial too, where you find those properties that have poor lease agreements in place, and if you can strengthen them, then it's a more attractive tenant, therefore lower risk, and therefore the capitalisation rate that the value will use is lower, so it gives you a higher value. There's a bit of a mouthful in that.
No, so like breaking that down is like people can buy a commercial deal that's got like not the most favourable lease agreement, and they could change that to get a better lease agreement, a longer term lease agreement, which will add value to the property, and then they could flip it. Right, just that's just their cash grab in how they can work. Right.
Yeah, you put a different hat on too. You get creative.
Yeah.
You can buy a large industrial freestanding property, and if you can have the ability to put some dividing walls in, you can split the tenancies up. You're de-risking it by having 4 tenants, not one. But that requires additional capital, right? So this is where every individual circumstance is different. And it's like you can make some really good money, but it's like anything. You can make good money in like a residential development, but depends on the level of cash you've got.
Yeah, can you afford to do the subdivision and build on a separate dwelling and stuff like that? So I guess I want to ask you, like, at what stage in somebody's property portfolio and life would you suggest them moving away from residential towards commercial? Because, and why?
If they're really hunting for cash flow and they've got a reasonable, healthy deposit, then I'd be looking at that commercial options. But obviously explaining to them the risks that are involved, but also by holding their hand and sort of coaching through that process. We're de-risking it because I get to see the deals that come through, and I punch holes in them for them to go back and have those thoughts and discussions. But there's going to come to a stage where you're going to have to pull the trigger and and ride that wave. But from like an individual portfolio perspective, the commercial properties, they don't have that sort of emotional driver. It's more of a business decision based around figures, numbers. So I like to see a portfolio with a healthy level of residential and commercial. And for most investors, I just look at it and go, well, if you've got $60,000, you can potentially get into a residential investment. If you
$60,000 cash.
If you want to keep saving for your commercial in order to get to an asset that's got that 30% deposit plus your stamp duties and your costs involved, then you're going to be out of the market for longer. Could you just buy that residential, get that growth, and then that's helping you essentially save more money as you grow, and then use that to go into commercial. The residential, I look at it as like you're building your foundations of your portfolio, which are sort of your fundamentals, and they're going to be growing in that capital growth prospects, and that's going to help you draw down that equity to get into your higher deposit cash flow play. If you've already got the deposit for a high yielding cash flow commercial property, then let's have a look into it and discuss the pros and the cons. And if you're open to it, and your portfolio or your strategy is more around, I want income later in my life, I need that, then you can just start off on a commercial. But you just there's a lot more education around it, and you need to make sure you're asking the right questions and working with the right people, because it's a beautiful asset, right? Like the tenants pay a lot of the outgoings, if not all. It's more passive than residential from that point of view.
Like if you get it right, it's pretty amazing.
Well, in order to hit your goals, you're going to need to get your mind into a commercial property for passive income.
Before we continue today's pod, I want to ask you a few questions. What is your property investment goal? What type of properties do you want to own? How many? What size valuation property portfolio do you want to own? And how much net income do you want to be earning? Essentially, what's your magic number in passive income that you want to be earning? And do you know how to get there? And if you do you know how to get there in the least time possible with the least amount of risk?
Sam and I have been helping people invest in property and build property portfolios for years. People who are now replacing their income through property, and we want to help you do the same. Right now, for a limited time, we are offering free property coaching to our listeners. We won't be able to do this forever, of course, so head to propertypals.au/coaching. That's propertypals.au/coaching to see how we can help you achieve your investment property goals. Link will be in the description too. Because just for me, it's like I hear people like, yeah, I've bought 15 properties and 10 properties. I'm like, cool. Like, but how much, I mean, you're getting capital growth there, great, it's awesome. But like, how much money are you making, and like, can you turn that into more wealth, and how fast can you turn that into more wealth? Where it just looks like, it's good for people's egos. Like, yeah, I bought all these properties, sick man, like that's great. But like, what if like you've got so much 15 properties, you've got a bit of maintenance and work to deal with, versus like if you could roll a bunch of those in, or deposits that you had, into commercial, and you have less assets but better assets, and you're building your wealth faster with less work. Why not go down that route, right? That's the way I look at it. It's like, I don't want like this. It's contrary to what most people say, is like, you want like 10 passive income streams, and I went down that route, and I just think it's dumb. It might, for me, I think too many passive income streams is like, why would I bother with? I mean, if it's full passive and I don't have to talk to anybody, even residential is supposed to be like the most passive investment you can have. You still got work there, and I just think, why not have less assets, making more money, put to better use, and less work.
Yeah, I'm a proponent of that as well. You've got to understand the people that are marketing to you for buy 10 properties.
Yeah,
and
because
sell
they're
5.
gonna win. Yeah,
If they're buying 10 properties for you, then they're taking their fees out of it every single time.
yeah, exactly. And that's where you come to like buyers agents. Like, we just do residential because it's the best asset, and like, well, hang on a second. Like, yeah, it is. Like, let's not say it's not good, and it's like an awesome place to start for sure. And not everybody can get to that commercial play with those larger assets as well. So
you can do joint ventures into commercial as well.
Yeah.
And you can work with some really, I guess, influential people in the space that have done it before, and you can sort of dip your toe in. There's many ways around it, and there's no, like, maybe I'm a bit contrarian in, there's no perfect property. It's like, well, what suits you, your current situation, your risk tolerance, and it might just be that maybe property isn't for you as well.
Yeah.
Like, maybe shares is a lot more passive. You don't get the leverage.
Absolutely. ETFs, good Vanguard fund. You chuck some cash in there, and you can get 8% at the moment, and you don't have to talk to anyone.
Yeah.
And just loaded in there. DCA in.
Yeah, you can get dollar cost average, and
Dollar
then
cost, yeah.
you can also do margin trading with shares, so you can get that leverage as well. But then that's the shares is an emotional roller coaster, and
Yeah.
There's people out there that are really great at shares and they understand it more than what I do. So I sort of step back and say, well, there's a million ways to make money.
Yeah.
It's just picking the one that suits you. And we were just talking about it off air before, is like, trying to focus in on what actually lights you up in your day. Like, do you wake up energized, going, oh yes, I get to do this today. Like, I woke up this morning and was like wide awake and getting ready just so I could come and do this podcast with Jared. It's kind of, it's fun,
Yeah.
So that is the journey of what I think people should really start to focus in on, because you can make $500,000 a year, but if you're stressed out of your brain, you're not spending time on your health or your family or your good relationships, then you're going to get burnt out, and you're going to sit back 10 years later and go, fuck, was that worth it?
Yeah. And it's thinking about it, if we relate that to people's property portfolio journey, there's a bit of work that goes into getting finance from a bank, right? Like driving around, getting things signed, and like just making sure things get across the line, and all these documents you need to fill out and read, and sometimes you need to get solicitors and lawyers to look at things, depending. But like, and you're doing that in like with 15 properties, and then you're working a full-time job, and you're trying to just drive this thing where it's like, hang on a second, can we slow down and look at a different route? Maybe like, let's buy less of these residentials, and like, at what stage do we decide to go, let's buy a larger asset that is going to grow in capital growth with some good cash flow, and put that into commercial. And my question to you, Sam, is like, at what stage does somebody, and this is what I'm thinking about now personally, is like, what stage do I go, all right, if I go and spend some cash on buying another residential, like, what's like, that can slow me down and getting closer to buying a commercial, right?
It can slow you down to get to your passive income goal. If you're just going
Yeah.
residential, it's eating up your borrowing capacity every single time. You'll get there eventually, and with a residential portfolio, you're going to it depends on what growth rate you put into it, but historically, it does grow greater in capital growth, and that's just an average though too. So obviously, the markets we're buying into from a residential is superior because we've put a lot of time and effort and money into.
Like we just talked about that 25% growth in 9 months.
Yeah.
You can get that.
You can get that in commercial too.
Yeah.
But then it depends on the cycle you're in. See, I'm very obviously 34, haven't been through. Obviously, came up during the GFC periods. I saw that. It was quite interesting to see. But I am very mindful of we run in cycles, and we haven't seen hard times here for a while. And just I'm more risk averse because I'm trying to anticipate if that time did come, which inevitably is going to come. How would the portfolio fare in that time?
It's a really good thing to bring up is your own personal risk tolerance. Some people that stick to the route of residential and they buy 5 to 10 residential properties, and I know that people have done this or more, is because their risk tolerance is like very, I don't know whether you call it high or low, but like they don't want too much risk and they haven't moved in the commercial play because they're like, I'm safe and I'm happy, and they're young and they're doing good, and they don't need to go and put something into possibly a higher risk for a higher return.
Yeah, well, that's sort of like my point going into where you're choosing commercial or resi.
Yeah,
but they're both great strategies. You can just go all commercial and you can do really well. You can go all residential and do really well. I like to have a balance of both because it's just diversification. Different locations, different asset types. When I invest in shares, crypto, but my main source of, I guess, wealth is property because I've studied it, I've worked it for 15 plus years. Like it's just
what you think.
Why would you not when you know so much about it? And I'm still learning every single day. I mean, it's crazy just to. I mean,
you said this before. It's like how much you learned in the last 5 years. Imagine where you're going to be in 5 years from now.
Yeah, it's cool, and like getting exposure to different thought processes and different people and different opportunities. I mean, the development space is always interesting, but for me, it's too time intensive. I'm not in that get rich quick. Let's become a developer and make a couple $100,000 a year from just a development. Because
so much work in it. Hey,
what's the point? Like my property's gone up a couple $100,000 a year. I did nothing.
Yeah, exactly.
But yeah, so going back to the commercial side, the residential component, generally speaking, will increase in value, throughout the compounding effects of time over commercial. Whereas the commercial will have that greater income, so you'll reach your passive income target faster through commercial. However, if it all went to you had to sell everything, in 30 years' time, the chances are you'll have more wealth in your your net wealth in residential, but then you've got to figure out, well, what is it that you're actually trying to achieve? That passive income target, from my perspective, is quite important because it frees up your time for you to enjoy what life is about. And it's not about working. It's not about investing. It's about just making the most of the time that you have on this world, which we don't know how long we actually have.
Yeah, exactly. You can do so much more with the income coming in than it's sitting in, capital within a property, capital growth within a property, or equity within a property. The way I think about it is like the feeling of knowing, like it's very different. Like the feeling of knowing that you may have 10 residential properties and you've got a fair bit of equity in all of them, and you could pull that equity out and use that for cash to fund your lifestyle or whatever. But at the same time, you're going to have to pay off that in interest, whatever you take out as well. Or you could sell down some, and then you can get a bit of a cash and you can use that to live. That feeling, I believe, is very different than owning a property and knowing it's giving you, or a couple of commercial properties, and knowing it's giving you enough cash flow to live the life that you want without having to take anything from anywhere. And I think that feeling, that that emotional feeling of just going like, oh yeah, I've got this amount of cash that I need to live this sort of lifestyle is so different than having it in equity or in a multitude of properties that you can't sort of touch, I guess.
Yeah, exactly. But if your work that you do lights you up and you're just looking for places to store your wealth, residential is a pretty simple, easy process to go down. But I'd always challenge you along the way and say, well, we've got, if I see multiple portfolios, with a lot of residential exposure, I enjoy that. I enjoy picking it apart and going, well, you got a few units here, hasn't done much growth. I don't perceive it doing much growth in the future. So let's de-risk it. Let's get out of that. Go into a growth asset.
Yeah.
Stick into resi. Or you're really heavy in residential. You've got good assets. Have you thought about commercial? Because it's a great asset. And if you start learning about it, you understand what I'm talking about. It's
another level of property game, right? Like, I think that's why I'm being drawn to it. Is like the learning so much. Like, it's like you can do, like you said, you can do so much in residential, sell down units, buy high capital growth properties, more cash flow, more capital growth, and have a blend of that just within residential. But then, playing that game and then moving to like the residential, the commercial is like, whoa, that's like it's a whole new world.
And with your mindset too, being a business owner, you understand business. So a big part of analysing properties for residential is direct comparison, like with like, similar properties, understand the value, and then you can quickly look at rents. It's not the hardest thing to build confidence around. The different layer of commercial is you're doing that. Generally, you're putting offers through with a 28-day or 60-day due diligence clause. Obviously, you don't want to weaken your offer by having a long due diligence period.
Yeah.
So it depends on the market you're in, but you're analysing the business that's leasing the property from you. That's a key part, and you're asking a lot of questions, and knowing what to ask is a very great way to start. Like, I like to delve into, well, what's the business doing? What's their plans? What are these lease agreements? Can we tighten up these lease agreements? And I can see the value in a commercial buyer's agent. A lot from what they do for their money.
The ROI of investing in a commercial buyer's agent is definitely worth it, right?
Yeah, and the hard part is that there's a number of them out there. There's not as many as residential, but even though, like everything, the ones with the biggest marketing campaigns and the largest market exposure, they may not be the right ones for you because they've got so many people in the books. You've got this long wait time, and you're just another number in the queue.
We've experienced that, haven't we?
Yeah. So I'm sort of excited about it. I like the valuing of commercial too, and the maintenance is lower. And if you're getting like those industrial sheds, just 2 concrete walls and a roof, right?
So cool. So that's a good point. There's so many different types of commercial.
Yeah.
I think coming back to your point of like what lights you up is like, for people making the decision whether they're going to stick with residential or move into commercial, that's a really big factor of like what excites you and how can you have more fun investing in your property portfolio in the way that you do like. For example, if you love buying land with a house and subdividing and doing that in residential and you can do that really well, great. Or if you just like buying lots of units, but stick with that if you love that game and you can continue doing it. Or if you just want a different challenge or something a little bit different, then you can move to commercial as well. So it doesn't need to be just about the cash flow or the capital growth and how you just build your portfolio based on building wealth. It can be about enjoying the journey too.
Yeah, well, I mean, I could rattle, like, there's a strategy, there's a guy on the Gold Coast who he's a niche and he finds units in good spots where high rise is going up around it. So it's a lot of marketing to that area. He basically buys established older properties and then does a full gut job, renovates it, sells it within 3 months, and he makes a couple $100,000 a year. Just keeps flipping properties, and he's got his.
What's his name? Because I met somebody like 5 years ago.
I don't know if he wants me to tell the story.
So he's got a brand that like people know.
No, he just all his own cash, right?
Is it a couple?
No.
Okay, yeah, sweet, different people then.
Yeah, but and then there's the Airbnbs of the world, which I challenge once again. Byron Bay just released that there is a maximum of 60 days per year that you can rent out your property on a short-term accommodation stay.
Whoa.
So that whole Airbnb strategy that a lot of people have been pushing the last few years, and is why I've never pushed it, is because there's just so many complexities with that. When a new cash flow stream and property comes out, you just got to be cautious. I like to sit on the sidelines and wait for a few things to evolve. And
I have heard of somebody in the Byron Bay area buy like 10 to 15 or 20 properties just for Airbnb in that area, and to be all in on that without the diversification, like that could be a move to go, oh, well, do I need some commercial properties in Byron Bay? Like buy some of those big warehouses that like Stone and Wood and all these, new fancy la-di-da breweries are going into,
yeah,
pull some cash off the table from them guys.
I mean, you've got assets in Byron Bay. It's not a bad thing. Hopefully, it's got a lot of growth. It's going nuts lately, and you just put a tenant in there. The whole is we are undersupplied, and they're trying to figure out ways that have an immediate impact to help people have housing. And
it's smart for the local government to do it that way.
Yeah, it's a good thing too.
It'll slow down the growth of Byron Bay with less tourism.
Don't
you reckon?
Yeah, it's a good point. I don't know. There's still a lot of hotels.
Or it could, and it could slow down the growth of tourism, but it could increase, because it's, it could increase the property prices for homeowners there.
Yeah, or it
could
decrease because it's been overinflated because everyone's been buying 10 to 15 Airbnbs in Byron Bay.
Yeah.
And
everybody's sick of paying like $500 a day in parking.
Yeah, no, go for a surf. I have to pay to go for a surf now.
Woo. Yeah, take the fun out of it.
But yeah, there's that's another key point is diversify. I mean, if you've got a strategy, it's great. But like, I wouldn't just sit on one. And that's like, if you're just pure Airbnb plays, now, have that mind and always be challenged your thought process. And like, the residential space is always safe because you need houses, right? Will there be changes in the future where the government start, they're taxing you for, like, investors obviously have a higher cost of holding than owner occupiers. They have to pay high rates, they have landlord insurance, etc. You've got to have a go, and you've got to be doing something with your money. Otherwise, you're fighting. If you're just constantly saving your way to retirement, then you're fighting inflation, which is going up. They say 2 to 3% per year is the target, but if you take into account true inflation, it runs around 7 to 8. You're actually going backwards, and it's a harder path to save your way to financial freedom than it is to invest in smarter assets.
It's a really good way. It's a really good mindset to have of like fighting inflation versus putting inflation on your side. Because when you go from having cash to investing in assets like property that grow with inflation and the economy,
and you're fixing your debt in the past also was actually the opposite effect. So that cost of the debt is getting cheaper by you doing nothing.
Absolutely. It just compounds. Like, that's that great book, The Debt Millionaire. Yeah, which we'll have to talk about. So to wrap this up, basically, when's the right time to get into commercial for you and your property portfolio? There's a number of factors, right? There's one, when do you want more cash flow and still get a bit of a capital play? And then it can be a personal thing based on where you're at in terms of your own age and your own risk tolerance, but also like where you're at with mental stimulation and fun in your property portfolio. Do you want a little bit more of a challenge, or learn something new and move away from residential? There's so many different factors to consider.
And diversification
for sure. Yeah. Also, cost opportunity. Opportunity cost, I should say, as well, is something to consider, which we didn't really touch on here, but we will in more pods. But yeah.
And if you're thinking about, well, I still don't know what to go down, just go back, zoom out, look at the bigger picture. If you're trying to get to a certain goal, whether it's called retirement or having a exposure to something else, like, look at that and work your way backwards. If that always helps, and having that wide-angled approach, and then delving deeper and deeper into it, because it could be that you might think that you are a commercial buyer, and then you get further into the deal flow and you realize actually maybe this is not for me. Because I don't need to take on a certain level of risk, and maybe my portfolio is perfect the way it is. So
and people handle stress differently as well. Like maybe it's a bit more stressful for you than somebody else getting into. I love environment where I need to learn more, and some people are like, F that, why would I bother? And good for them. Like I'd probably rather be in that boat too. But if people have are still thinking about it and they're just internally processing this and digesting it themselves at home, don't do it yourself. Like reach out to us, hello@propertypals.au. We can help you structure your property portfolio to get you to where you want to go with less stress and more fun and more wealth. Just reach out, hello@propertypals.au.
/coaching.
Yes.
Check that one out. We put that one in. Basically, it's all about like let's have a few conversations. I'll put you on the right direction. So between Jared and myself and the team here, and at least get you thinking and point you to the right people to have the right discussions with, and you'll enjoy something in the conversation, and it'll be good to sort of meet people that are listening as well, and also leave some questions if you have any. Like there's always a bit of a gestation period with property, and it's good for you to understand the people that you're getting involved in, because there's some really great people out there that are wanting to help, and there's also some really poor people out there that are all about themselves. So
good
try to avoid those ones.
Thanks for listening, guys.